Well, it's just been announced and the Federal Reserve has done nothing. They haven't changed rates. So this is contradictory of some of the former Fed officials came out and said this week and last week, that further tightening is required. We're going to keep doing it and keep doing it and keep doing it. So here's my take on this. Here's what the Federal Reserve does. Well, let me go over to the transcripts that they're actually reading from, and let's just go in through here. This is where when they read each month from when they go to the podium and they read this stuff, and that's what Federal Chairman Powell's doing right now. There's only minor words that they change, and they do this specifically. But what I want to give you guys context on is let me say this. The Federal Reserve is jockeying in a position. They're letting the markets control a lot of this, because if you read this data, nowhere in here other than them saying, well, further tightening probably going to be required. Well, further tightening is required. Why don't you just keep doing it? Okay, so that's the question that I have, because we're starting to see inflation coming down. And I know a lot of you guys are out there saying, well, 4% still isn't 2%. Well, it's a lot better than 9, okay? And then the next piece of this puzzle is if you take, and when they do finally get caught up with the housing expenditures in the CPI and the inflation numbers, you're gonna see inflation dramatically drop. Now, I know, guys, you're saying out there, there's still a lot of pockets out there that have inflated prices. Yes, there is. But the inflation generally is starting to come back down. So here's a few points that I just want to make to you, and just to give you some guidance. But think about this before we start reading through this. If the Federal Reserve came out and said, okay, folks, we're done increasing rates, and if the economy gets back to even 3% or 2.5%, we might pivot. What do you think the markets are going to do? The markets are going to take off. Mortgage rates and interest rates in general are going to come down. That's exactly what the Fed doesn't want to do. So they're going to come out and continue to say, we're going to watch this thing really tightly. And if we see further inflation coming or creeping its ugly head, we're going to raise rates. Well, I would expect them to do that. But when you're coming off a 9 handle in regards to inflation, now you're at 4, and a lot of the data that you're using is lagging. There's something there. So here's what I want to just point out a few of these topics to you. You can see right through here. Let's see, where was it? They said specifically here, let's just go through here. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. In support of this goal, the committee decided to maintain the target rate for the federal funds rate at 5 to 5.25. Holding the target rate steady at this meeting allows the committee to assess additional information and implications for monetary policy in determining the extent of additional policy firming that may be appropriate to return inflation to 2%. So now the media is taking this, saying, well, they're telling you right there that they're going to raise rates again. Well, guys, this is the context that they've been using at the last 11 times that the Federal Chairman Powell come out and spoke. So they don't change a lot of this wording. They just change necessary items because people like me, nerd alerts, go in here and dissect every word they say. So here's my playbook right now. Don't do anything if you're out there doing a mortgage right now. If you're working with us, we're going to advise you should you lock or not lock. If you're a mortgage advisor out there, please, I'll start posting daily alerts to let you guys know what my thoughts are on some of this stuff. But here's what's going to happen. Federal Chairman Powell is right in front of all the reporters right now telling his piece. Then they're going to start asking him questions. That's when all this is going to dissect. So right now we're showing that the markets are down considerably. The Dow's down, the Nasdaq's down, everything's down. And actually bonds are kind of holding their own. They're only down 14, okay? But I got a feeling this is all going to turn. Once Federal Chairman Powell starts getting questioned from people, the atmosphere is going to get a little looser. And I saw just a moment of his talking, and he's got a little bit better demeanor than he did last time. The last meeting he came out, he looked like a nervous wreck. He was antsy, he was shaking. This one he seems a little more calm about, because I think the markets were predetermining this. The CME, the Chicago Mercantile Exchange, the bond markets were telling us there's almost a 97% certainty that they weren't going to do anything. But then you had former Fed people coming in, like I said, and giving us, well, they might change their needs for the dot plot. Or, some former officials came in and said, they're going to continue to raise rates, and they're going to continue to raise rates and raise rates and raise rates. Guys, they're not. And it's just they're trying to talk their way out of this whole inflation mess that we're in right now. So stay tuned, relax. You're most likely going to see the markets kind of take this data after he talks, absorb it, analyze it. And then tomorrow, I can almost assure you, unless there's something that comes out of the woodworks we don't know about, the markets are going to like this data. And as more and more information comes out, like we had the producer price index come out today, it actually is showing deflation on the producer side. So unless producers are going to get greedy, they can start cutting their prices because their prices that they get, their raw material prices, are actually coming back down in line as well. So relax, folks. The Federal Reserve did nothing. Let the dust settle. Give it about 24 hours. And I can almost assure you that the markets, the stock market, and the bond market's going to like this data. Thanks so much for watching, guys. If you want to find out more about me and my team, what we do, how I do things, I'm a mortgage advisor. So if you're in need of a mortgage and you'd like to reach out to us, all I need you to do is reach me at therateupdate.com. Here we are. You can give me a call, apply online, or do whatever you need to do if you're out there looking for a mortgage. Take care, guys. Thanks so much for watching. Don't forget to subscribe down below so every time I post a video, you get an alert. Take care. See you soon. Bye-bye.